to the Pulver Report. It is the 25th of March. We're going to finish up Q1 Thursday the 28th as trading wraps up early with the holiday weekend. Let's dive into everything. Let's have a look at, I was looking at this last week. This is the advanced decline volume line. Melt up continues as we saw last week. Rare is the case that we see the Fed with a FOMC announcement plus rate decision plus press conference, where it just goes the same direction for one day. So that is what happened last Wednesday. The Fed was certainly tilting toward the dovish side, but a couple things I wanted just to point out. Wouldn't be surprised, at least in the near term. Right now I'm looking at the market on the SPY. Pre-market's 519.90. Which with the close, this is SPY. The close last week was 521. So we're down just under $1.30 or so pre-market for today. I mean, if we count the numbers, we only have three. I mean, it's barely red, but it still counts. So how many bars? If we start here. So 17 of 20 weeks. It's pretty amazing, right? 17 of 20 weeks bullish on the SPY. Impressive stuff. Little bit more choppy on the Qs, but looks like we have about 16 out of 20 on the Qs. Qs did tap the highs on Thursday, post FOMC Wednesday, tap the highs, and pre-market again down about $2.30. Very curious to see. I mean, chart alarm you have set here 432.47, right below these lows. That's where I'm looking to see if there's a bit of a floor drop. So that big pivot that would have been Friday, Thursday, Monday. No, what am I talking about, dude? Friday, Thursday, Wednesday, Tuesday. So that was last week. So the Qs were a bit more of the lagging index compared to the SPY and the DIA. But DIA had no problem breaking fresh highs, but has given some of it back since it closed on Friday. Pre-market also down about 60 cents. So I'll point this out. If we break, let's say this, if we correct back to the lows, let me see what that is from a percentage standpoint. If we correct back to the lows, wow. So just let me make sure I measure that accurately. If we just sit at that high, so if the Dow corrects back to this level, where we've had some pretty solid support, that's a 3.5% correction. Okay, I could see that without necessarily letting the floor break. If the SPY corrects towards this level, that's right around 3%. Okay, so the NVIDIA gap is getting further and further out. 3% correction I think is doable, but it doesn't necessarily break the floor. And this is what I'm looking at right here. If we break that low, that's where I'd say this bull run is certainly going to get checked. It still probably will. I'm trading it both ways. I mean, if we're going to have a high and the candle move is going to be $7 to $10 to the downside and then finish right back in the middle, that's okay. But I'm looking to see what's the high or low for the week. The way that I established positions going into this week, we were doing it on Friday. I think we took a trade on Friday to position for the SPY out to the 5th of April. So we get through this week's trading. Which again, U.S. equities markets are closed on the 29th. I'm going out to the 5th to kick off that first week of April. We should have a non-farm payroll on the 5th and also have the first week of Q2. So if we go into the news for this week, it's going to be a lighter calendar. So this week's trading, Thursday, you can see all the bank holidays in other parts of the world. Asia when it opens up earlier than the U.S. So bank holiday, Thursday, Friday. Well, we see it on Thursday, New Zealand, Aussie, but Switzerland, Europe, UK, Canada, US. Interesting. So somehow we have U.S. markets closed, but we still have the PCE price index print on Friday at 8:30 a.m. and then 11:30 Powell speaking at what? Moderated discussion with macroeconomics monetary policy conference, San Francisco. All right. And then we have a daylight savings shift in Europe. We already did it here in the US. Other news, we have consumer confidence Tuesday, nothing high impact today. Aussie CPI, Fed speak, Canada GDP, US GDP, unemployment claims for the US, pending home sales for the US, and U of M sentiment, which is usually on Fridays, release on Thursday. So kind of a light week, but we do have quarterly expirations, which I think will be a big one. I want to take a look at open interest, and I'll pop in and say good morning, everybody. I see everyone saying hi, hi, hi. And good morning, Gary. Good morning, Angela, Chris, David, Trish, Jacob, LG, FK, Brad. What's happening, everybody? All right. Open interest for this week. Subject to change, obviously, but call open interest 396, put open interest 2 million. That's a big difference, right? You're talking about almost a well, we're nearly at 400,000 here, 2 million here. We're looking at about a what is that? A 5-to-1? About a 5-to-1 put to call. It's pretty big, right? 5.21. Doesn't mean it has to drop. It just means that those levels are sitting down below. And put open interest could also be, doesn't have to be long puts. It could also be short puts. So anyway, it's getting lighter and lighter as we're potentially drifting higher. I'd say the meat, if I zoom in, a lot of this, and what's realistic. If we were to drop to, I mean, we started the week, or we closed last week at 521. Realistically, um, $9 or $10 one way or the other. So 521, if we have a downside of 511, that would start to bring in all these levels here. If we melt up a little bit higher, we could possibly drift up into the 525 zone and then, fall back to 515. We'll see how it plays out. Okay, but I'll be watching to see how this, maybe a 8, 9, $10 candle forms on the SPY this week if we can get some decent volatility. Um, yeah, we'll see. I'm curious how today looks. I might go for like a 0 DTE trade on the SPX or the SPY today if I can find something that I like. I'm curious if the SPX gaps in any way, shape, or form, and I'll also look at getting position for. Um, this is what I'm positioned for going into the 5th. And then I'll make an adjustment on this. That trade's already open, so I'm going to edit this out. And I just didn't love the expirations this week. I think it's something I want to take a look at in class today for equities on demand. But if we went out to, yeah, I don't know. I mean, the 27th, the 28th, if we get a $50 move this week, maybe I can position for that. Otherwise, the 28th and the 1st, which I'd have my sell expirations expiring the 28th, my buy expirations or my long expirations expiring the 1st. But I'm curious how much that costs and what type of movement we get this week. We could have a bit of a Fed hangover to wrap up Q1. I'm hoping there's a little bit more excitement and volatility ahead. So let's see what happens. But I will evaluate that this morning. Overall portfolio review. I've got to write down I've got some diagonal spreads I need to take a look at and see if I can lower the cost basis a little bit further. That would include instruments like BITO, JD, on the SPY, on the Qs, on the Russell, the IWM, GLD, URA, PayPal, Chewy. I actually own some shares, and they had earnings last week, and it's just hanging out right around my break even. So we're sitting at 1662. I've got a break even of 1663. I'm going to see if I can go into like a 1750 for this Friday and maybe lower the cost basis by 30, 40 cents. If it gets called away, $17 or so, maybe I can snag a few dollars there without trying to hang on to the stock, but I'll have a look at that this morning as well. Good morning, Jan. Good morning, Donna. Nice to see you. Let me do that now, actually. Let me go into Chewy and see what this looks like. So 28th, I could grab 1750, so I can go about 90 cents in profit, grab another 16 cents, which gives me over $1. Let me see if I can do that this morning. If it doesn't get called away, that's okay. But if it does get called away, break even 1663. Let me bring up my spreadsheet here. Oops, no, no, no. Okay. So, let's see. Chewy 1663 break even, 1663 break even. Yep. So right around that 1662, 1663. Okay. So I'm going to see if I can issue these this morning with the opening bell and just do basically a dollar. Um, I could do a 15 delta as well. I mean, it's to me get the extra, to sacrifice 6 cents right here. If you can see my screen, 6 cents of credit for a covered call, but increase my profit target by 50 cents. That certainly helps. So I'll debate either the 1750 covered call or the 18 for this Thursday. If I want to go out another week, if I go out to the 5th, see if the premium is worth it. If we get up above $18, I get 24 cents. I think that's okay. I might do that. Or the 18.5, get 16 cents, wait another week. Yeah, I think that looks better. I'll do this. I'll grab the 1850. So to me, going out to next Friday, the 5th, do an 1850 covered call. That gives me just shy of $2 of profit. Plus, I'm grabbing another 16 cents. That should give me, so 1663 minus the 16 cents credit, 1647. If the stock gets called away, 1850, I make 203. I'm in 500 shares, so I make $1,000. See if I can flip the old stock for some profit. All right, so that'll be the game plan on Chewy. Go back to the stream. Um, are you trading charts? What does that mean? I'm looking at charts. So what are you asking? Dollar index. I'm going to assume that the dollar index is going to continue to be a challenging instrument for right now, which has been very noisy. So I don't love the dollar. Outside of I was correct on the direction. I'd say somewhat correct because once we came down to this level, I was still holding my long positions. I got back to break even and just took small losses on the dollar basket, not wanting to get ahead or try to sit through a bunch of the noise during FOMC. But anyway, the dollar can't make up its mind, which is making this somewhat more challenging. I mean, I don't think we're having some type of wedge pattern. I mean, that seems ridiculous, doesn't it? That we have a really nice broadening pattern, but we're making a low, a high, higher low, lower high. So is it trying to form some type of wedge again, and then we have this pre-summer push that's still waiting? I don't know. So dollar index continues to be tricky, and the Japanese yen we know brought interest rates off of negative 0.1%. Now they're sitting between 0 and 0.1%, so it's somewhere fluctuating, which similar to what the Fed does, that 25 basis points range. The Japanese yen is doing the same thing, so they're at 0 or 0.1. So give or take whatever that is, essentially zero. It's not negative any further, but it's essentially 0 to 0.1%. Right. So that's the dollar index. Oil continues to hold pretty solid structure going up. I'm still fairly bullish on oil. Energy stocks have been up as well. I just read something this morning that the energy sector is getting somewhat crowded. We'll see. I mean, they have. I mean, if you look at your big energy stocks, they have a ton of cash. They're in positions to buy, buy back if they want to. They're in positions to give dividends. They're in positions to appreciate. We also have a ton of energy stocks that are beat up and undervalued as well. So oil climbs is dollar cornered by yen and won. Speaking of won, I haven't looked at that one in a while. Let's go to the higher time frame here. This is the dollar Chinese yuan. So we're sitting at highs from 2022, highs from 2023. I would keep an eye on this right here. As they say, there's no such thing as a triple top. So if this is higher low, higher low, higher low, higher low, and we hit this level, we could be looking at something interesting developing here on the dollar Chinese yuan, where the dollar gets stronger, yuan gets weaker. We might see more accommodation coming out of China to kind of lift their animal spirits. And I do think the China indexes are looking better. So here is FXI, which is large cap China. You want to look at KWeb, that's tech. You want to look at the HSI, that's the Hang Seng. But we're sitting here at these equal lows with this major support back in like October 2022. Bounced off that level right there. Again, structure wise, we haven't confirmed that this is a bull market, not even close. We are basically kind of guessing that, hey, if this low holds, that's a great spot to be looking for some type of bullish pattern. Now, we could take this down and say, okay, well, I think we have a bullish pattern emerging here. But the easy way, especially when it comes to an index or a stock, is just trade what's super wide open, right? Because what stocks can do is they can carve out this long bottom, and this is where the rally ensues. It'd have to be a break of this trend line, which would be, this instrument FXI would have to be above 2750. But the nice thing is from 2750 to about 3250, I mean that's a pretty big gain for, let's say, a $5 move on a $24 stock. $5 move on a $24 stock is a 20% move, right? So if an index moves 20%, that's always pretty exciting. And that would be, a 60% from bottom to top if we have some type of range. So curious if the yuan plays out that way. Dollar yen, the yen pivots hard. As they say again, no such thing as a triple top. I would be very leery of trying to short this thing. As enticing as it looks, I could see the yen getting choppier in here, looking really, really tasty to the downside, but then blasting higher. Just I keep saying it, and I'll probably keep saying it until it's obvious that I'm wrong. But until this Japanese yen is unraveling, until we see a very sustained risk-off tone to the markets, I don't think the Japanese yen gets stronger. And therefore, I think that we should anticipate, higher prices against the yen, or just in summary, a weaker yen. Okay. And I typed this out last week. We're in a bull market. Okay. We're in a bull market. The Nikkei is at all-time highs. U.S. markets at all-time highs. Momentum is strong. The greed is being fed by investors. I mean, you've got FOMO investing from 2020. You've got catch up and chasing momentum in 2023 and 2024. Markets are ignoring all the geopolitical risk out there, and markets want to grind higher. So I don't see the carry trade being something that's going to unravel. The only way the Japanese yen gets stronger right now is this high volatility and risk off. That's it. So, I mean, if we have a strong yen, okay, how long does it last? This entire year, the last, I'd say, even 6 months, anytime we've seen a stronger yen, it gets bought hard. And that goes as early as January 2023. We had that big 2022 correction where we had essentially balance from this rip, right? March 2022, JPY is incredibly weak. It balances there, and that point forward has been carry trade, carry trade, carry trade. This has all been carry trade right here. From that point forward, this has been carry trade. CARRY, meaning positive swap. So if you're holding anything against the yen, you're getting paid, right? You're borrowing in yen and putting it anywhere else in the world, you're getting paid. It's right now, it seems to be like the easiest arbitrage in the world, which is what most big money is doing. Okay. Nikkei 225, still grinding higher. Go back to all-time highs, 1989, it's higher. Okay. Is a pullback needed? Yeah, probably. But now that we at least have tested this level, so let's go all-time highs there. Okay. Something to reference. And if I just looked at this from a fib perspective, I'll just take this low. Because I think we could say we have a low, we have a high, we have a higher low, we have a higher high. So let's look at that fib and see if there's any pullbacks off these recent movements. So right in here. So would it make sense to see a pullback towards the 23, 30%? Sure. Come back and retest all-time highs, use that as support, see if the Nikkei is going to continue to grind higher. Right? Same thing's true in our markets. SPX. There's my large fib, projected symmetry up here towards 6,000s. On the SPX, if we take a fib on this recent swing right here from the October 2023 lows, to current price, I mean, I keep having to adjust my fib because we won't create a high yet. So if we create a high, then yeah, we have some reasonable pullbacks. We could pull back 38%. Okay, 38% on this October swing to now, and we come back and test all-time highs. Now, like I said, a 3% correction is just barely breaking this trend line. This is probably going to be like a 6 to 7% correction, come back and test all-time highs. That would be about an 8.25% correction. That's a steep correction if we have one. I still think the 3% is going to be maybe all the market offers us. 3 to 5%, okay, fine. But 8%, it's like, okay, is something wrong? Is everything okay there, bull market? We'll find out. Okay. All right. So lots to watch. So we've got dollar index as being really indecisive. We got the Japanese yen, which I think is going to continue to stay weak. We look at currency strength for this morning. This was an interesting move on Friday, right? You've got the dollar, the yen, and the Swiss all risk-off trading. Swiss National Bank cut rates last week for the first time in a while. They were up to 1.75. They slashed it to 1.5. We're going to start to see more and more central banks cutting rates this year. I just reviewed this last night. Some of the more like emerging markets like Argentina cut rates, Brazil cut rates, Czech Republic cut rates. Trying to think some other ones. Mexico cut rates. So Switzerland was one of the first majors. The Japanese yen is raised by 0.1% effectively, but the Swiss cutting probably opens the gates up now where, everyone's been waiting for the Fed, Bank of Canada, ECB, Bank of England. They've been waiting for the Fed, which probably won't happen until June. Now that Switzerland cuts, I'm curious if the ECB is next or the Bank of Canada, Bank of England. I'm not sure about the RBA or RBNZ. They might also be looking to cut rates as well. So is it a race to zero again? Probably not. I mean, inflation is still a thing, but it's likely going to compress the range between like the weakest interest rate and the strongest. Right now, as far as the majors go, the U.S. is sitting on top, 5.25, 5.5%, along with the Bank of England, RBNZ as well. And if they start to slash rates a little bit, it just kind of brings it down where it levels the playing field a little bit more as far as that big interest rate differential. But that's likely going to be some action this year, starting now and then working our way through 2024, starting to see some cuts. Okay. Today's volatility pretty quiet. Dollar and Swiss on the bottom, Aussie pound on top, but volatility as far as the vertical axis goes pretty tight. We did oil. Let's go gold and silver. Gold at 21.73. Measure move on gold for me is at 22.71. That's a halfway point. Full measure move is all the way up towards 24.60, 24.70. We're going to see if gold continues to be bid, SLV or XAG, so silver. Silver, very clean chart. We break above 26. This would be, I think, a nice momentum trade. If we can get a nice clean break above 26, I think it's a very quick run to 30. And then symmetry gets us up into 34, 35. So it might still range, but what I don't want to do is be forcing trades where it's like, okay, I'm going to do an iron condor, I'm going to do a strangle. If I did that and all of a sudden this breaks, I do not want to be trying to adjust because that thing hopefully I will just take off. So I'm more directional on silver. And once we get a break here, I'm going to get a little bit more aggressive. But I have some shares of SLV. I have some puts running on SLV. I will buy some SLV if we come back to this low or this low. I'll look to buy some SLV. Otherwise, we break, and I'm going to get long with some creative option plays to lever up and generate some profit. So that's SLV. Bitcoin trading at 66,965. A lot of indecision the last couple of days, or last couple of weeks rather, with the high at 74. I'll pull back towards around 61. I still think the pullback is likely deeper. It could be deeper. Maybe some chop in here. But let me see if I can get my fib on this. So we pulled back to about the 23%, 30 to 38%. I've been talking about this the last couple of weeks. So we get between 60,000 and 50,000. That to me is my window to buy. You can just look for a trend line break if we get it nice and clean. If it's a red candle here, follows through a little bit more. We got a nice little pocket play in there around 5,500 as well. So past resistance becomes support. Nice little pocket fill around 55,000. And then if we get a trend line break, I would say kind of level one. If it holds and it starts to break, that's a good add-on spot. And then we should be looking at some hopefully new highs going into the later part of the year. Okay. If the Nasdaq is struggling as well, right? If we see a downturn, right now I'm looking at about $2.50 to the downside on a pre-market open for the Qs. We're going to open up here in about 4 minutes and find out. But if we open up to the downside, the Qs and the Nasdaq, or the Qs as is the Nasdaq, are correlated pretty tightly with Bitcoin. And I want to see how that plays out. Also, Nvidia was up last week, but failing to break the highs. So is Nvidia, and this is one thing we have to watch too, is Nvidia going to have enough, momentum to power up and hit this $1,000 mark? Part of me thought that if we hit $1,000, I'm curious what that total market cap is. If we hit $1,000 on Nvidia and that somehow like pokes the all-time high market cap, or Nvidia market cap wise for even a brief second is bigger than Apple, something tells me that might be a bit of a toppy form in the market. We'll find out. I don't know. I mean, I think Nvidia is ridiculous. Um, I mean, it's fun to watch, but it is a wild chase that I don't really feel like participating in. And I don't feel like chasing it where it's like, oh, just sell it. It's like that makes no sense either. I mean, we could have a range from 970. We could have $130 range here, and this stock goes, next to nowhere. So just watch that $1,000 level. If we hit it, possibly we can hit that with some divergence again, and then maybe look for a short-term play, but short-term at best. I mean, otherwise, what I'd like to see on a video would be just give me a decent dip. We had this crazy parabolic run. Let's get a dip towards, the 30 or 38%, and then see if we can retest the highs. I'd be happy doing some, out of the money credit spreads down here. Just let it do its thing and let the bulls continue to chase and bid this thing up. Okay, so oil, gold, silver, Bitcoin, some stocks. If you have some requests, type it in. I'll wrap the session up here in just a little bit. And then I will be joining the A1 team at 10 a.m. if you want to join me again on my YouTube channel at the top of the hour. One thing I mentioned, I did a session last night. One thing that was interesting reading over the weekend was, we're obviously off to a great start, right? S&P's up. We're 1 minute away from opening bell. We'll see if this gap's lower. Let's see where the SPY's at today. We're off to a great start, but how great? So in the modern market for the last 20 years, okay, we'll say the last 24 years, since 2000, this is the third best start ever to S&P for the first 56 days of trading. Okay, I think it was 2011 and 2019. Those are the only 2 years that started off hotter by like a percent or two. I mean, the S&P is essentially up, 9.8, almost 10%. 2011, 2019 were a little bit higher at the 10 to 12% window. All time, okay, so since 2000, third best start ever. All time, this is the top 15 best starts. Okay, so it's making some headlines, obviously, and I guess the downside would be that the expectations to keep this going. I think that's what's going to be potentially the hard part, is we can have this melt up continue, but you have to remember that the S&P only annualizes around 8% a year, right? We're already up 9.5 to 10% this year. So how much higher do we actually go? Which again, hear me out. Could we go 20% from the start of the year, go up 20% and then drop 30% of that, drop 50% of that, and have ultimately like a 12% year, 10% year. Yeah, we could go 30% and then pull back to 15. There's all sorts of ways this plays out. It's been interesting to read that all the major banks and all the major investment groups, man, Disney is finally ripping. Man, I could have got filled. I wanted to get filled at Disney at like $80, man. Never came down to $80. That's disappointing. Doesn't matter. All these banks and investment groups are raising their forecast now to 5,400 on the SPX or 540 on the SPY, which sure they are lifting it because they're already wrong. I mean, they're like, oh yeah, the SPY is going to go up 2% this year. Well, it's already up 9%. So they're scrambling to forecast and say that, oh, we based on our projections, blah blah blah. So I talked about this last week on Friday. I mean, this seems nuts, but to have this high connect the dots up here towards like 580 to 600, if we get all the way to 600 and then settle back into like 540, that would be crazy interesting to see that happen this year. To have just this much momentum, this much like complacency where it's just go up, go up, go up. And it gets to this ridiculous level and then we actually have a correction. And that correction is what puts us at like a 530, 540 for the year, you know? So is it possible? Yeah. I mean, the market can do whatever it wants, but I'd like to see a pullback. I'd like to see a correction. But if I don't get one, then yeah, of course, at some point I'm going to turn way more bearish. It's just not yet. I think right now it's like if we got through the Fed, we're getting through inflation data. The Fed's more interested with a bit of a dovish tone they took last week. They're more interested in GDP. They're more interested in growth. They're more interested in price stability. They're not looking to disrupt the market. They're not looking to talk down the market anymore. And I think the market's loving it. And the fact that the market was ignoring them too, they're just talking. And now they have this runway where it's a silent FOMC. There's nothing in April, and the next rate decision's in May. Again, pause is expected, right? Any 15-minute strategy you recommend for intermediate beginners to master in Forex? Um, that's a good question, BMac. Yeah, I'm trying to think. Last week I had a session discussing. I mean, if all you looked at was like, use a 4-hour time frame, 1-hour time frame for kind of directional bias, and then a 15-minute time frame, follow those directions. So if your 4-hour, 1-hour line bullish, go to a 15-minute chart, look for some precision trade in the same direction. That'll be your best. That'll be your best, alignments. You don't have to go super high on like a daily or weekly, but a 4-hour, 1-hour, if it shows bullish, trade bullish. Easy. If trades bearish or shows bearish, trade bearish. Time frames, alignments in Forex is really simple. Align, and then take your precision time frame like a 15-minute or a 5-minute, and just trade in that direction, and then you can essentially scalp if that's what you're looking to do. Yep. So all right, so we gapped lower. I think I'm going to look at something on the SPX, see if we can struggle to take out the highs today, which I don't necessarily think that we will. That's 5260. I'm going to take a look, SPX. So I don't think that we're going to go much higher than 5260 today. So I'm going to take a look at maybe do an intraday here. Costco, that's full profit. Okay, good. Trade on the SPX, go out to today's expiration, 5260. Really? I can't get more than freaking 20 cents for this? That's ridiculous. Well, I can't do that. 52.45. Could probably do that. Maybe I can do 50. That's a big difference in credit, though. I can get 80 cents on the day. If I do a credit spread, though, it just doesn't look great. Well, whatever. I'll come back to this in a second. Let me get those Chewy covered calls on. I need to get these issued in. So go to positions. And just want to see this. So I don't need to bore you with my trading here, but there's my shares of Chewy. I have a long call at 1250, and I'm selling against that at 2250. What I'm going to do is against these shares for this week, I'm going to go add in a 5 contract covered call out to April 5th. So I'll go trade April 5th. There's my 1850. It's only trading for 12 cents now. Bullocks. I had that showing for 16 a little bit ago. Chewy's down 1647. Expected move is only about 18, maybe 17 and change this week. Let me go. I'll go 18. Get 18 cents for this. Let me calculate this out. So 1663 is my break even. If I collected 18 cents on the credit, that's 1645. Get it called away 18 if it jumps up there. Be $1.55 and 500 shares. 775 versus 1,000 this week. But in case the stock dips a little bit, I'll take the credit. So, or get in 12 cents. 12 cents and get it called away 1850, $1.99, 9.95. Sound like the price is right. Let me see here. I think I'll take it's a 15 delta. So right now, if I keep it 83% probability that it doesn't get tested, this finishes, out of the money for the full 18 cents credit, lower the cost basis. And that's possibly more important than right now. This is post earnings. Go back to Chewy. 18 is here. 1850 is getting up to some breakout levels. So 18 is right there. I'll take the 18. I'll take the additional credit. I'm going to go 18 and grab the 17 cents. All right. So let me sell. This is 5 contracts. 5 contracts there for 17 cents. Filled at 17. Similar order. All right. This will just take me a couple minutes. I'll do this. I'm going to wrap up. I'll wrap up today's session right now. Come back and join me in about 22 minutes. I'll be in at the top of the hour joining Nick and the team. So probably Nick and Frank will be on for a little bit, and I'll pop in and join them for 30 to 45 minutes. Equities on Demand session, I'll have it at 11 o'clock. All right, so wrap up this session. Hit the thumbs up button for me. Leave a comment, all that good stuff. Let's have a good week. It's going to be a short week of the holidays with Good Friday, but let's see what we can get for the quarterly expirations. We'll wrap up the official month. It's been a good quarter, and let's make it a good day and a good week. All right, I'll see you at the top of the hour in about 22 minutes. Thanks, everybody. Bye.